Hey guys, Mark Flockhart, and today we're going to talk about when's the best time to buy insurance. This is going to be a very quick video because there's a couple things. There's three main points that I want to go over. There are actual times that you should and shouldn't buy your insurance policy. Now, granted, I get it. If you need it, that's the best time, right? If you're buying a car, you don't have insurance, then do that. If you're buying a car coming up, or you're thinking of buying a vehicle, or you're thinking of switching companies, then this video is going to be directed on how to get the best price out of this while timing it perfectly. There's a couple things. The first piece that we're going to talk about is what we call an early shopper discount. There's other names for it. I don't know the exact technical term. I've been calling it early shopper for probably 10 years, so it's kind of stuck in my head. If you say it to an agent, they'll understand it. But basically what that means is if you're going to buy a policy, they reward you for not having to do it now. Not all companies, but a lot of the good ones. So let's say, for example, I'm going to buy a policy today. Some companies, if you say, well, if I push that policy out 7 days in advance, will I get a better deal? And the answer is yes. You'll usually get like 2 to 3% additional off for doing that. You mix that with pay in full or any of those other discounts, and it adds up. Now be careful. Some companies, I'll use AAA as an example because they're the one company that I know that does this, is you have to buy it 7 or 10 days out and you can't have quoted it before. So what I mean by that is, let's say, for example, I quote it today. I call you up, Mark, give me a quote, get all my info. The quote goes out, you like it, 7 days later you buy it. Most cases, they're going to give you that discount because you initiated the quote in the beginning. That's not so true with some of the other companies. AAA is one of those at this current time where you have to buy it 7 to 10 days in advance. So even if I wait 7 days and I say I'm ready to go, I've got to wait another 7 days for it to start. I can pay for it today, get it all set up. I won't get that full deal, that full discount until it's purchased 7 or more days in advance. Now, that's not the only way. So there's a couple little tricks to that. And hopefully I'm not confusing you here. So that's one piece. There are other companies, let's just use State Auto, for example. The longer you push it out, the more of a discount, up to, I think it's 25 days. If you're going to purchase a policy, home or auto, a lot of these guys do it mostly on home, but some are starting to do it, or mostly on auto, but some are starting to do it on the home as well. So you can see where you come to a company and they say, well, I want to start this policy 30 days from now. That's going to give you the max discount. That's for the early shopper portion. When you go out 7 days, that's 90% of the time. I would say most of the time that's what companies do. There are some other companies you can ask and get the details. But State Auto, for example, if you go 15 days, they'll give you a little bit more of a discount. If you go up to 25 days, they've articulated that with having the longevity of a customer when they're not in any hurry, they're not in any rush. They know that you're pre-planning. You're called a confident planner when you're planning this ahead. And so you're going to get a better deal for that reason. The second way to get the best deal as far as time-wise on your policy is to plan on when you've been with a company. For example, I'm with Citizens today and I'm thinking of switching. I'm actually going to do some videos on me shopping around so you guys can see some different options. So I'm with them today. I've been with them for probably 4 to 5 years. I don't know exactly around the time frame, but I've been with them for a while. And because I'm hitting that 5-year mark, that makes a big difference. So I'm just going to use companies as examples. If I left Citizens today, or let's reverse that. If I was joining Citizens, let's pretend I'm with AAA or Geico or whoever. I'm with Geico and I'm switching to Citizens. When they look at my policy, I'm going to get that early shopper discount because I'm going to plan this ahead, but I'm also going to get a discount for longevity because they want you to stay for 50, 60, 80 years, whatever the time frame is. Oh man, if you could drive 80 years is a long time with a company. If you'd stayed 80 years for one company, then they're going to give you a better deal, but it kind of caps out at 5 years. So as long as you've gone 60 months, some are 72 months, but you don't really see much of a price difference. They've really kind of pinned it down to that 60 months. And it starts at, well, it really starts at 3 years or 1 year for companies, but it really makes an impact at 3 years. So if you've been with a company for 1 year, you're going to get a deal. So don't switch before that year try to time it so if you're right around that time frame that you get the best deal there. If you're 3 years in, you're going to get a better deal. And then you're kind of going to max out at the 5 to 6 year mark. If I'm switching from, let's say, Safeco or Geico or whoever we just said, and I'm going to Citizens or Safeco or Liberty Mutual or all of those guys that do this, and most of them do, they're going to give me probably a couple $100 cheaper. Because of that longevity, it adds up and it shows kind of that confidence that they know I'm going to likely stay. I don't like to shop. So that customer to them is worth twice as much as the person that switches every 6 months. Keep in mind, not all companies are checking how long you've been with a company. Let me try to change that. I said that's kind of confusing. So it doesn't work in reverse. It's not negative that you switch from company to company, but you don't get the discount for the longevity, if that makes any sense. So if I went to Geico this year and 6 months later didn't like them, I went to Progressive for 6 months, and then I went to Citizens, and then I went to so-and-so. Yes, does that add up to what's called an insurance score? They're checking that piece, and that can affect it. But it doesn't really negatively affect that if you're not looking for that longevity discount. So they're not like, oh man, this guy's had 6 insurances, we don't want him. They still want you as long as you're paying the bill, right? If they see on your report that you left them because they canceled you or you were non-renewed, that's a different story than if you just left them because you don't like them. 1 year, 2 year, 3 year, 4 year, 5 years, no matter what you have, that longevity plays a factor. So look at when you initially started your policy with your last company. And if you're at that 4.5 year mark, I would say go another 6 months. Now, how much is that savings? It's not going to be the light and day of the policy. So if you're already going to a company and they've quoted you and they're saving you, $600-700 a year, which is what I'm seeing very often. If you're not shopping right now in Michigan specifically, you should be. But I'm seeing the different prices go out, and that discount, yes, will save you hundreds of dollars. But when you're comparing that to the savings that you could be getting if you switch now, sometimes it makes sense. So you're going to have to determine whether that's worth it or not. Hey guys, if you're getting good advice out of this, definitely give me a thumbs up. Don't forget to subscribe if you want more of these videos. I'm going to dive right into the third piece, which is your claims history, your credit scoring, which they call insurance score. So I've had a lot of debates on this channel, and people have been asking, well, I thought they don't use credit. Well, they don't. They use insurance scores. It's very, very similar. If I were to put an insurance score next to a credit score, it's going to likely give me a similar answer, even though they measure those completely different. So the insurance score is something that uses the credit bureau, but it's gone through a company called LexisNexis. Don't need to know that. But it's a company that measures and pulls a credit, but it's looking at your insurance history, claims. It's looking at anything that involves insurance, nothing to do with did you pay your medical bill, this, and that. So it's different than your insurance score versus a credit score. But in all honesty, when you match the two together, they tend to most likely be very, very similar, because if you're paying bills on time, you're going to likely have a good insurance score. Claims that aren't your fault, things like that, you're more responsible in the insurance world. Don't switch your insurance if you know your insurance score has gone down. The easiest way to do it is if your credit went down. I know they don't use credit, I just explained why they don't, but I'm telling you from my experience, 10 plus years, every time I've seen the credit go down, I don't know why or how, I've seen the insurance score go down. Please don't leave me a comment about how it's a scam and all that. That's not what this channel is about. If you want to complain, I'll put the link for the DIFS, Department of Financial Services, and you can email them and tell them all that. This channel is just here to help you guys. It's not here to collect complaints, even though the complaints do fuel my channel a little bit. If you guys go off and you guys have a debate, great for me, but that's not what I want to do. So the insurance score and the credit score, measure that. So if your credit or your insurance score has changed, then that may be a positive or negative. Now, here's the cool thing. If you're with a company now, keep in mind they can rerun your insurance score. So if you think it's gotten better and it's gone up, have them rerun it. They'll go through it. It takes them like a week. Usually the underwriter has to go in and manually do it. And when they do that, that could potentially give you additional savings with your current policy. Fourth piece is your claims history. So if you've had tickets, accidents, anything like that, I'll use me as an example. I had a ticket or an accident, I don't remember, or both. They kind of superseded each other. I've had that myself about 3.5 years ago. If I was looking for insurance and it hasn't hit 3 years, I'm not going to check around because I know that that ticket is going to affect heavily on that next 3-year mark. So if I'm close to that 3-year mark, wait until it hits the 3 years or longer. It's okay to shop ahead of time. They can quote you that ahead of time so they can push the quote date out past that ticket or past that accident. That way it's not rated against you during that quote process. Just know you can't buy the policy ahead of time without having an underwriter going in and authorizing the removal of that. So as you may have seen, there's not a lot of discounts that are temporary discount. At least I don't operate in that world. There are companies that do offer a one-time welcome to our club group. Some companies offer like a 3% kickback if you're starting new with them, and then after 3 years or something, that goes away. So those are things that companies do offer. That's not really something that I like to dig into because it's just temporary. It's the same thing when I call my cable company. I try to get the best deal without offers. Problem is, I don't want to shop all the time. I don't want to shop today and in a year and in 2 years and in 5 years, and I'm with Safeco, then I'm with AAA, then I'm with Progressive, then I'm with Nationwide, then I'm with Geico. There's hundreds of insurance companies, and it's not worth the extra effort. The amount of time you put into doing this, you might as well do the link below and just fill out a quote where they quote 17 companies, right? That's usually the easiest thing. The last is the overall portion. So in order to get the best price for your policy going forward before you're renewing, something to think about is your whole package, your whole profile, as we'll say. So think about this. How old are your cars? Are you changing something on them? Is it going to be full coverage or something? Has the car, this is very difficult to research, but has the car lost value? So the repair cost on your car could have dropped, which would get you a better score with all of the companies, your current one and the one going forward. The trouble is with your current policy, it's kind of like getting a cable bill where you can't really change the plan you're in most of the time without completely canceling it and then starting over. It's very similar with insurance companies. They don't let you cancel one current plan to requote into another one. At least most of them don't. So know your car, know your vehicle, whether the replacement cost is going to go down or up, not likely up, but it's possible that the repair cost could go down, very unlikely, but then score, your credit score, your location. Are you moving soon? Should you delay this? Do you need it while you move? So things like that. Also the number of people in your house. Now that you're in certain states, like let's say Michigan, for example, you have to claim how many people live with you. It's like a $5 difference, so it's not really big if there are a lot, but it makes a difference. So knowing those things are going to help you determine when is the best time to go forward and purchase the next policy. Hopefully those ideas helped. If you guys want some more specific details on discounts, I'm going to actually link a video up here so you guys can watch my discount video, which is going to go through and give you like the 15 top discounts. I also have another one that I'll try to put over here so that you can watch another discount video. That way it helps you guys get the best price that you can possibly get. I'm Mark with Think Insurance. I will see you in the next one.